Well, good morning, everyone. Good morning, everyone. It is Monday, April 13th, 2026. So good to see you all this beautiful Monday morning, nice and cloudy outside. I hope you all had a excellent, fantastic weekend this past weekend. We've got a lot to go over this morning. We're going to make the absolute most of it. Want to remind you all that we do have our Wednesday broker Q&A contract review along with our training section. And I want to remind you that we do not have a Friday meeting this Friday. No Friday meeting this Friday, so do not show up. I will send you a bunch of reminders, but no Friday meeting this Friday. I will be in the beautiful city of Chicago for the weekend. Come back, land at about 1 a.m. on Monday morning. So we are having the Monday morning touch point exactly 1 week from now, but no meeting this Friday. And let us start by taking a look at the year-to-date inventory level. This is updated every single morning, and I post this on our X account. When you look at the year-to-date, and this is from January 1st all the way through April 12th, so that captures everything leading up to yesterday. 17,214 new listings entered the market, and that is a drop of 4.4% year over year. Last year, just shy of 18,000 new listings. On the pending side, exactly the same number of pendings, but we know that agents can go backwards in time and add pendings. So that's going to be on the positive side. Bottom line is that ratio, when we don't take into account back on the market or anything like that, is on the plus side. So we are doing better than we were last year, which is really encouraging. We're not noticing as many new listings as we had last year, and we continue to see a higher level of demand this year compared to last year. And if you're ever curious about that little snapshot that we do Monday through Friday daily basis, just log in and subscribe to our X account. And you can also get that information when you go to Market Update on teamprice.com. And I post exactly the same information right there. So whether you go to teamprice.com Market Update, or whether you go to the X account, you're going to get that latest information. But we are here to talk about the new listing to pending ratio. But, before we go there, I'm actually going to show you the economic calendar for the day because existing home sales came out and it came in lower than expected. The consensus was north of 4 million. This is for the entire country. Came in at 3.98 million. That's going to be a drop of 3.6%. This is going to be a really important week for rates. Take a look at the email that I sent you this morning. And right now, the bond market is, yields are up a little bit. We're up 1.1 basis points. It started off the day really high, so we did make some pretty decent gains between when the market opened to where it is right now. We do have a question, Melanie. Do you think that is because a lot of the listings that would have relisted are actually getting foreclosed on? No, not a lot of those. Foreclosures are increasing at about a rate of 15 to 17 on a weekly basis. So that doesn't that doesn't justify such a dramatic decrease on the number of new listings entering the market. I would say, sellers are hunkering down. I'd say, if anything, so a lot of sellers are simply saying, I'd say it's a combination of a few factors. Certain sellers, and these are discussions that I'm having or even feedback that I'm getting based on the articles that I'm writing, there is a perception that the quote-unquote market will come back really quickly. That's why I really like that chart that says, hey, if we apply the 26-year appreciation, this is how long it's going to take for the market to recover. So we do have people that purchased 2021, 22, 23, or even folks that thought about selling back in 2022, 23. They held selling the property. Well, they're going to have to wait way longer than 2-3 years. So there's definitely a seller hesitation, hoping, waiting for the market to come back. And there's also the rate lock effect where sellers that are ready, willing, and able, or I would even say They are ready and able, forget the willing part. They're ready and able to sell, but they're simply not willing because they're waiting for rates to come down. They don't want to give up that 3.5%, the 4%. So the rate lock-in effect is real. And we are not seeing the level of increase in new listings that we saw last year. Violet brings up a good point. Maybe they are leasing the property. We are noticing a skyrocket number of new lease listings entering the market. So there's a lot of truth to that. People that are saying, no, let me just go ahead and just lease my property for another year, 2, 3 years, and just wait to see what happens with the market maybe next year. Now, it is April 13th, and we did have a lot of weather events. This has been a fairly wet early spring, and that makes a difference in our area. But we're certainly not seeing, the data does not point to this explosion of inventory that a lot of us were in a way anticipating for 2026. Quite the opposite. And then on top of that, we're noticing a steady demand for Austin real estate, even with a heightened rate environment. So that's good. That's all really good news. Even though we did forecast and project 20,000 active listings on the market by June, July timeframe, as of now, it does not look like we're going to hit that 20,000 active listing mark, and we are up year over year pending. So those are all really, really good things, and that's why we're noticing pricing stabilize within the area. So let's take a look at the new listing to pending ratio, because we can look at the year to date, we can look at the macro, but let's start looking at the week over week and just see if this confirms this intuition that we're getting about the Austin market. When you look at the number of new listings entering the market, and this is going to be for the 6-county area, Travis, Williamson, Hayes, Caldwell, Burnett, and Bastrop. The number as of this morning, 1,448. Keep in mind, new price increase, price drop back on the market. It locks in at 11:59 p.m. tonight. So when you receive this information tomorrow morning, it will be the latest and greatest, and it'll never, ever change. Whereas active under contract and pending will change over the next few weeks. You look at price increase. We are at 236 price increase. Well, that number drops. There's a drop on that, a pretty significant drop. 2 weeks ago, 353. Right now, 236. Let's take a look at price decrease. We're at 1659. So we've already beaten the previous week. Okay, well, this is interesting. There's that little bit of a reversal right there. We were doing really well on that price decrease. That got down to 82%. And then all of a sudden this week, it shoots up to 88% price decrease. We haven't seen 88% since February 16th. So we're looking at trends here. So what trends are we noticing? Yes, a drop on the number of new listings, higher than the previous week, but still dropping year to date. But we're starting to notice more price drops. So mid-month is higher. You're absolutely right. See that mid-month right there, jumps up to 89%. Little bit of a drop towards the beginning part of the month. So there's that increase to 88%. Let's take a look at back on the market, see what's going on here. We're at 227 back on the market. This number drops down to 16%. Now let's take a look at active under contract, and not bad, 494 active under contract. 494. Now this is where you get to guess. You get to guess. Go ahead and guess. Let us go ahead. We need 5 guesses. You know the drill, 5 guesses. Sonia coming in at 222. Oh, Sonia, you upped it to 232. You threw me off there. We've got Melanie coming in at 256. Sonia, 232. Let's go ahead and get a few more guesses going. We've got Jen at 245. So we've got 3 down, 2 to go. We need 2 more guesses on how many pendings from April 6th all the way to 10:14 a.m. Charmine, 2:15. We need 1 more person We've got Brianna at 240. Let's go ahead and click this number. We're at, okay, interesting. 217. 217. Can someone pull up the email that I sent you last Tuesday to see what the ratio was? Monday recap. Let's take a look at the Monday recap. That was the Monday recap from 4/6. And what was the ratio on that Monday recap? Let's take a look at it. Someone pull up the Monday recap. That was what, 460406. The Monday recap. Let me pull that up. Touch point. Yeah, someone's going to have to pull that up for some reason. Monday touch point. Yeah, someone's going to have to pull that up. Monday, April 6th. Monday, April 6th recap. We ended, so I've got the monthly here. So 0.5. So we were at 0.5 for the Monday recap. 0.5. And we are at 0.42 right now. It was 0.5. It was 245. So we're at 217. So last Monday, I'm looking at the email right now. Last Monday on the pending side, we're at 245. We're at 217. And we're at 495. We're exactly at 494. So there you have it. That's a pretty, fairly decent. We're at 740 total. When we were updating this information this exact time last week, that number was 740. And here's 711. It's supposed to be picking up. And now a little bit of a drawdown. Now, does the weather contribute to this? I would say weather has a huge contributing factor within the Austin market. We're so used to having, nice and sunny, and all of a sudden it rains for 2 days straight. Even though yesterday was weird because you'd have almost like Florida rain. It would rain really hard for about 5 minutes, and then it just nice blue sunny sky, and then overcast, and then it'd rain, and then it'd be nice and blue and sunny. Which the fact that last Sunday was Easter meant that this week we should have actually seen a little bit of increase. And we really did not see that level of increase that we were expecting. We actually had more activity the week before as opposed to this week. Also, I have buyers who are pushing for longer closings because they still have leases in effect, but want to find a home now. Oh, that's interesting. There you go. So this number did come down. We were at 0.42 ratio. We were on a really good streak right there. We had 4 weeks in a row where the ratio outperformed the previous year. That stopped March 16th, and we haven't quite returned to the ratio outperforming. So this ratio is going to be that leading indicator. Now it makes sense why that year-to-date figure looks really good, because we started off the year with a lot of greens outperforming last year, and then we went into some reds, and then we went into a lot of different greens there. So when you look, we are now 14 weeks into the year in 3, 4, 5, 6, 7. Half of the weeks we outperformed last year, and now we're transitioning to underperforming on a week-over-week basis compared to last year. And this is why we keep up with this data on a daily basis, weekly basis, do our Monday touch point, because if this trend continues, we're now seeing a pullback on the pending side. If this trend continues over the next 3-4 weeks, well, then the very thing that we said the market is not experiencing will actually start happening. We will start seeing an increase in inventory because the pending will start lagging the pending compared to last year. That's why we track this information on a weekly basis. And let's take a look at that. Look at the new listings. I mean, we are down double digit 2 weeks ago. We're down double digit right now. So we're off by 237 new listings entering the market here so far this week. We'll get about 100 or so listings that will enter the market between now and 11:59 p.m. tonight, but it's going to be negative. We're not going to get 237. There's no way we're going to get 237. 54 more price drops, 145 less price, or 54 more price increases, 145 less price drops. We'll get about another 50 or so price drops between now and 11:59. So this number is going to be negative. We've been negative since the beginning of March. 16 more back on the market. And look at this. 486 less properties went pending. Last week, that number was 559. That number was 44%. So that's not better. That's the good news. When you compare week over week, that's also better. Wondering if it will go the other way when school gets out. Seems like the leasing market is heating up. You're absolutely right. The leasing market right now, huge demand for the leasing market, mainly because rents have gone down by so much that people are absolutely pursuing the leasing market. I will still say this. This is a weekly snapshot comparing the same exact week last year. When you look at the cumulative market, better than last year across the board. This is just something that we have to be really looking out for, because if these numbers keep on trending red, if we go 10 weeks where we are underperforming last year, that's when the market starts shifting. So right now we're overperforming last year, but still very fragile, not by 10%, not by 15%, by single digit. When you look at the pending year over year, it's that single digit outperforming last year. Take a look at the daily update that I put together. We're outperforming on the pending side only by 3.9%. Now, that could reverse itself, especially if we keep on seeing these red figures. Let's update the month-to-date data. Just give me 1 second so we can do the month-to-date. New listings so far this month for the 6-county area, 2,387. Price increase, 406. Price decrease, 2606, 87%. So we're back over that 85% in March. Right now already 87%. Back on the market, 366, 15% back on the market. Active under contract, 837. Pending so far this month, 13 days into the month, 453. Wow, we're at a 0.47 ratio. The ratio for the month last week, well, we didn't have it last week, actually. Yeah, we didn't have the ratio for the month last week. The good news is that last week for March, it was 0.73. Now we're at 0.76. And we're going to go backwards in time. As a matter of fact, let me do that right now. Let me do the withdrawn, and that's going to be 236. Let's do the expired. That's going to be 131. And let's see if we have to update the pending for the month of March. And then I'm going to take a look at the week over week. This is going to be 2202. That's good. That's 0.76. Let's take a look at active under contract. That's 2417. That doesn't change. Let's see if we have to update February. February comes in at 1981. That doesn't change. Let's see if we have to update the pending from the 6th to the 30th. We should have to update that. Okay, well, that goes up. That goes up to 481. 481. And let's take a look at active under contract. That's 663. 663. And let's take a look at March 23rd on the pending side. 23rd to the 30th. That's 539. 16th to the 23rd, that's 574. 9th through the 16th, that's going to be 627. Look, we have to go backwards in time almost a month or over a month. It's crazy. 583. And wow, we're back in February or January. Yeah, we're back in February 23rd to the 2nd. Okay, that stays the same. Let's go back and take a look at that same week. We're only, wow, look at this. We're 0.81 versus 0.80 versus 0.81. So that ratio difference year over year is starting to pick up some steam, 1.3% to 1.9 to 3.9. That's the difference in the ratio year over year. We're down 32.8% right now, the difference in the ratio. Last week, we were down 29.3%. So that difference goes up a little bit from a 0.42. We're at 0.50 when we updated that same week, this same week last, that line last week. We're at 0.50 for the week of March 30th through April 6th. Came out to 0.50 versus 0.71. Now we're at 0.42 versus 0.63. So a little bit of a backtrack right there. On the monthly side of things, we are 13 days into the month. I would have hoped and expected this ratio just to be slightly over the 0.5. So this is for the month. So very lower than I was hoping for. Now, April tends to be a lower month for the ratio when you look at leading up to April. You look at March of 2025, 0.71 drops down to 0.65. March 2024, 0.76 drops down to 0.72, mainly because of the number of new listings entering the market for the month of April. But at a 0.47, I will say this, disappointing. It's a disappointing first 13 days of the month when you look at the new listing to pending ratio. So now we get into the, we've been saying 9 out of the 10 data sources that we look at are turning positive. Well, now we're more like at the 7 out of 10. 7 out of 10 are trending positive. One that we're highlighting that is now underperforming last year is the ratio. And the reason why this month is starting to underperform is because week over week, we're starting to see some red. So that's going to be reflected on the monthly because every single week we're now underperforming that ratio. That's why I like the ratio so much, is because even though new listings are down, if the pendings start going down a little bit more than the new listings, well, then the ratio is going to drop. So now we're in these 7 out of 10 data indicators are turning positive. And we just have to be really, really cautious about this and just keep on looking at it on a weekly basis. Now, let's go ahead and save this. I will email you the update here when I give you my recap. And let's take a look at the Austin Daily Briefing and see what is going on with the entire broader market. We are currently at 15,688 active listings currently on the market. And you ready for an announcement? I've got a new chart. Y'all made fun of me on Fridays saying, no new charts. I'm like, no, this is like 2026. So I had a question that I want to answer, which prompted a new chart, which is within each city and then within each zip code, out of all of the active listings currently on the market, what percentage of those active listings were listed within the past 30 days? And then as a percentage of all the pending listings, how many of them were listed in the past 30 days? And I created this one. I actually really like this one. And for me, it's a good indication of demand for that specific city, that specific zip code. And there's some insightful data here that we can lean into and help our clients, especially clients that are looking at specific zip codes, specific cities. So let me break this down. It shows you all the active listings per city, and then I've got one for zip code. And for example, Austin, there are currently 4,487 properties currently on the market, active listings on the market. 35.9% of those were listed in the past 30 days. Out of all the pendings that are currently on the market, 26.5% of the pendings were listed in the past 30 days, which is really amazing. That's good, solid demand. And then you go down to Cedar Park. Over a third of the pending listings, they're currently pending on the market, but over a third were listed in the past 30 days. That is a sky-high number. It's the number one city across the top 30 cities that we cover. For the entire MLS, it's 17.5%. You take Cedar Park, the number is double that. And what does that show us? Huge demand for that specific city. Property goes active on the market, goes pending. So these are percentage of pending that were listed within the past 30 days. And then the worst city on the list, Jarrell, only 1.7% of the pending properties were listed in the past 30 days. So we have this information for city, and we also have this information for zip code. Really quickly, you can just look at these figures and see which zip code is the absolute hottest one on the market and which zip codes are really, really struggling. You take a look at 05, 203 active listings on the market. 40% of those were listed in the past 30 days, and on the pending, 0. There's not a single property that's pending that was listed in the past 30 days. So what happens with that zip code? Not only is inventory going parabolic, sky high, but the demand isn't there. Not one property that was listed in the past 30 days has gone under contract. That is a shocking number just to see 0. And then you go down to 39, that's going to be the number one zip code. Over 50% of the pending properties were listed in the past 30 days, which is a crazy hot market when you look at that number. So little fun number to look at. Bottom line, how fast are they moving? And I like this chart. Yet another little tool that you have on your tool belt to help clients discern. So for example, you take a look at Kyle. More than 1/4 of the properties, 599 active homes on the market, over 1/4 were listed in the past 30 days. And then when you look at the pending, the number of pending properties, only 5.7%. So what does that tell you if you're a listing agent? Long days on the market. Long days on the market. Only 5.7% of all the pending properties were listed within a 30-day period. So the demand is simply not there. So even Round Rock, you take a look at the 3 zip codes in Round Rock. You go from 20.2 to 44 between 78665 to 78681. What does that tell you? Huge demand, 78681. Not so much 65, not so much 64. So it's a fun data point to look at, and it is available in the active residential listing package, and that's where you can get this new information. 46% of all the active listings have had a price drop. We are up 2.9% year over year on active listings. The pending, we're up 3.9% on pending, which is going to give us an activity index this year of 23.7. Last year, 23.6. So we are up just a little bit. We're up only 0.7%. year over year on the activity index. It's going to be interesting to see what happens with that activity index going into the second and then third quarter. But it looks like we did peak already on the activity index. Little bit of a ladder peak compared to the past 2 years. And it's now trailing down 0.7%. It's a difference of 0.7%, 0.7%. When you look at the activity index, you've got 3 cities in the green, Buda, Cedar Park, and Round Rock, all over 30%. On the zip code side of things, we have a total of 24 zip codes that are In the green, 14 over 30%. 14 over 30%. Here's your 14, 284929. So those zip codes are doing really, really well. And then you've got 18 zip codes between 15 and 20% activity index, contraction danger zone. And then 16% of the 75 zip codes that we track in the crisis zone. The market is frozen. Buyer paralysis, price correction will accelerate. Keep in mind, it's a hyperlocal market, so you've got to look at your specific market. Let's take a look at months of inventory. We are up 2.1% on months of inventory. But then you look at the city of Austin, it's down 9.6% year over year, up 42.9% over the past 2 years. But year over year, city of Austin is actually down 9.6%. We currently have 5.64 months of inventory compared to 6.25 months of inventory last year. We are projecting more homes will close this month compared to April of last year. We're projecting 2,863. So when you look at the number of homes sold per 1,000 realtors, we're expecting an increase of 7.2% year over year. Great news for us in the industry. We hit our low back in 2023. That's cumulative. January, February, March, and the entire month of April because it does include our projection. So that's really good news. From 470 to 526, that's great news. What about pricing? On the pricing side of things, we are up on the average sold price so far this month. We hit $600,000, which is an encouraging number. We're up 4.9% month over month, 3.1% year over year. On the median side of things, we're up 6.3% month over month, and we're up 2.1% year over year. March and April tends to be positive months when you look at pricing. February, March, April, those are all historically positive month over month gains in the actual price. But we can see we're just holding steady right there on the average sold price. We're not noticing that continued drop. On the median side of things, a little bit of a bump up right there. We're hoping that we'll end the year positive year over year because we can see a nice and steady decrease year over year after that pretty catastrophic drop from 2022 to 2023. Things are still trending down. It is only the 13th of the month. So as we approach the 20th of the month all the way to the end of the month, cheaper homes tend to sell towards the latter part of the month, and we do notice a drop in the average and median sold price. That's why you should check this information on a daily basis. When you look at the median sold price compared to 2 years ago, we are down 2.15%. And if today is the absolute bottom of the market and prices only go up from here, and we use the historical compound appreciation for the market, we can expect the market to return to its peak value in only 50 months. That's going to be May of 2030. So far this year, the average sold price is $561,668. So far this year, the average sold price is down 1.5% year over year. So far this month, so far this year, all of 2026, so far this year, 7,269 properties have sold, and the median sold price is $422,000. That's going to give us a drop of 2.1% year over year. The sold to list price ratio holding steady at 97.1, little bit of an improvement compared to this exact chart last week. So we are noticing a little bit of an improvement. Here is the bottom 25th percentile and the top 25th percentile. Both are negative year over year. The top 25th percentile down 1.1%. Bottom 25th percentile down 2.4%. This little red dot, anytime you see a red dot, it means that the top 25th percentile is underperforming the bottom 25th percentile. So if you don't see a red dot, it means that the top 25th percentile is actually overperforming the bottom 25th percentile. When you look at the median sold price so far this year, 7 cities are up in value. in 23 cities are down in value. The cities that are up in value, you've got Bastrop, Burnett, Dale, Lago Vista. Manor is up in value by 0.1%. Smithville and also Wimberley. Wimberley just hit a record high, a historical record high, going all the way back to the year 2000 when we started tracking all this data. It is up 22.1% year over year, which is just crazy. A record high in Wimberley. We've got a return to peak, and this is based on months. So, for example, City of Austin, if 545 is the bottom, if it does not go down under that 545, how long will it take? Based on the historical compound appreciation for the City of Austin, you're looking at 26 months. 26 months return to peak for the City of Austin. And the absorption rate for last month, we will not update the April absorption rate until about 5 or so days before the end of April. So we're looking at March, 21.1%. Great news. We are doing better than last year on the absorption rate at 20.8%. And then when you look at the 0 to 10 market flow score, where we add absolutely everything and we just get a 0 to 10 score for the Austin market, we're at 4.80. A lot better than last year at 4.62. So when we combine absolutely everything, 4.80. What we're looking for here, 4 months in a row where this score is outperforming last year. That's what we're looking for. We now have 2 months in a row where it's outperforming, February and March. It's going to outperform April. April of last year was a brutal 3.84. It's going to outperform. The big one is going to be May. What is happening with this new listing to pending ratio to where now we have 4 weeks in a row where we're underperforming? We started the year really strong going into February. First 2 weeks of the year, things were not looking that great. January 15th, everything pivoted from January 15th all the way to second week of March. Things were looking really, really good. Little bit of headwind going into the third week of March. And now we have the 4 weeks in a row where on the new listing to pending ratio, slightly underperforming last year. Maybe it's the weather. Maybe it's Easter. Maybe it's a lot of things, but we just look at the data, report the data. Okay. And that right there is your recap for the day. Any questions, you all? Any questions? Let me pull up the rate sheet for the day. You can get the latest rate sheet by going to resources.teamprice.com. The good news is that we did come down a little bit. On Friday, we were at 6.625. Right now, we're at 6.5. So that's the good news. Little bit of a break right there on rates. And right now, the bond market's holding steady. We're in between two repricing lines right now. We are up 1.5 on the 10-year yield. Keep in mind that that's a correlation, not a causation. But it's a very important week for rates because we have inflation numbers, PPI, Producer Price Index, that comes out tomorrow. We've got National Federation of Independent Business Optimism, that is out tomorrow. Inflation numbers are out tomorrow. On Wednesday, we've got some more inflationary numbers, import-export pricing. I like to look at import-export pricing. For me, that's way better inflation indication than even like CPI. They don't use hedonic adjustment. They don't use substitution. When you look at import and export pricing, it's just the raw price. So I really like looking at just the raw pricing. You've got some mortgage data coming out. And then going into Thursday, we've got some manufacturing data coming out on Thursday, and then not much going on Friday. So the big risk for rates will be tomorrow. That's going to be your big risk indicator for rates. if CPI comes in hotter than expected. Of course, we know that's not going to be good for the bond market. So that's going to be the biggest risk, is going to be tomorrow morning. By 0730, we will know that. I will send you all an email with that information. Investor rate is good, as Sonia said. Let's take a look. We've got investors 6.875. That's not bad at all. That's not bad at all. Any questions, you all? Any questions, comments, concerns, criticisms, complaints? Any questions? Going once. Going twice. No questions? Any questions? All right. Well, you know what, you all? Just want to remind you, download, if you've got an iPhone, download Austin Metrics. You can just go to the App Store and you can just search Austin Metrics. And it is #1 on the App Store. Free app. It's a free app. It's got a ton of really, really cool information. I'm actually working on version 1.5 right now, where I'm going to add some awesome new features. We're going to add some more really neat graphs, make it look really, really cool. That's going to be version 1.5. And then version 2, which kind of also working on, but I'm not going to launch that until about 3 months from now. That is where I'm going to add in some really, really cool information on people being able to request market reports, request a market analysis, and then have you all listed as team price agents and all that. So really excited for this app. Super, super excited. Had some of my friends that are not in real estate like, hey, check this out, and they were just blown away. They're super excited. They're like, this is amazing. Like, this is really cool. So take a look at it. Dan, with an Apple phone, anyone can download it? Absolutely. Anyone can download it. Anyone can download it. It is live on the App Store. Anyone can download it. It's live on the App Store. So we made it completely free. And some of the features that I have on version 1.5 that I plan on releasing maybe within the next 5 or 6 days or so, depending on maybe 5 or 6 days, where some of the graphs, they'll just be able to share the graphs directly from the app. And what else am I adding? Some additional graphs, some really cool stuff, some really, really cool stuff. So they can download it right there. I know that I'm already using it, so it's been great. It's been absolutely fantastic. All right, you all, if there are no questions, comments, concerns, criticisms, or complaints, thank you all so very much for joining. Super, super appreciate it. Take a look at the email that I will be sending you with all of this information. Tomorrow morning, take a look at the new listen to pending ratio. Maybe we will be able to, we'll see a little bit of an uptick on the pending side of things, but we will keep on tracking this information very, very carefully and very diligently. And that's all I have. So hope you all have an excellent day, and I will chat with you all later on.